Hey traders, Jason here from Levitt Brothers. So last Thursday, we had a huge up day for the entire market. Huge gains, 6%, 7%, 8%, depending on what index you looked at. Then we got some good follow through on Friday. A lot of quants were out in full force on Thursday night, Friday, over the weekend, talking about how a big up day like this is a good sign for a bottom, that's real buying, that kind of forceful buying implies that investors are coming back to the market, the vibe and the mood are improving, et cetera, et cetera. Lots of quants are scrambling to try and argue that a bottom is in place and the market is going to go up from here. So I thought it was worth it to go look back at the last 25 years and just look at every single big up day we've had and see what exactly happened after the update. What, did it indeed mark an important inflection point, or was it just a random up day that ultimately got sold into? So what I'm going to do is I'm going to look at every single up day going back 25 years. All right. So we will start in 2000, and this is 2000. Dot-com bubble was unraveling. So over here is the dot-com bubble top, a little double top there. And I have every single NASDAQ up day where the NASDAQ was up more than 6%. I have them marked here. So you can see over here we had back-to-back up days, April 17th and 18th of over 6%, over 7%. Boom, boom. Those gains were mostly given back. Then we had another big up day on April 25th. Got a little follow through, but all those gains were completely given back within 4 or 5 weeks. We had another big up day over here on May 30th, 7.9%. This one we got some follow through, decent follow through for about 6-7 weeks, but then we got this like rolling double top and everything was given back there. Then in October we had a 7.9% up day, and a few days later we had a 7.8% up day. But then we had a double top here and everything was given back. Then over here in early December, we had a 10.5% up day. A little bit of follow through, everything was given back. Then on January 3rd, we had a 14.2% up day. And we'll see in the next slide what happens. So point here, this is as the bear market, the dot-com bear market was unraveling. There are 8 different giant up days within a 12-month period, and every single one of them eventually gave everything back. So let's look at the next year. So this is 2000. I had to break 2000, 2001, 2002 into different slides because there are so many big up days, they wouldn't fit. All right, so here is 2001. Here's that January 3rd, 14.2% up day. Had some backing and filling. Then we had a tradable rally, mini double top here. And then as you can see, everything was given back in a pretty fierce and not violent, but a pretty fierce and steady way. Then we had, on April 5th, we had an 8.9% up day. And then a few weeks later, we had an 8.1% up day. Got a little follow through here, certainly playable for shorter term traders. But as you can see, a rounding top here, eventually everything was given back, plus a heck of a lot more. So this is 2001. So again, big up days, common, but they gave everything back. Now let's go over to 2002. There was one isolated up day of 7.8% over here on May 8th. As you can see, just steady selling. In this case, barely got any follow through for a couple of days before everything was given back, and we went down from there. This is the NASDAQ low over near 1100. The S&P actually didn't bottom until over here in March. Okay, the NASDAQ bottomed much before that. But you'll notice that, so thinking back to the last 2 charts, every single big up day we had was either sold into immediately, or we got a little bit of a follow through that gave us some opportunities to trade the long side, but they eventually was given back. And notice over here, when a bottom was actually formed, there were no big up days. So the people who think that a bottom is put in place when you have this hysterical capitulation, huge down day, and then it's countered by a huge up day, no, that didn't happen. Okay, like as the bottom was forming over here in late 2002, early 2003, there were no big up days on the way down, no big up days on the way back. Okay, let's go over to the next couple of big up days. Okay, this is in, what is this, 2000, this is 2008. So the financial crisis was unwinding. Over here, this is August. This right here was only a little bit, this was maybe 10% below what the price was about about 13 or 14 months before it, okay? The market topped in like summer of 2007, and then 13, 14 months later, the market was only down about 10%. So even though the financial crisis was unraveling, the market wasn't down that much. And then as you can see, September, October, November, it completely fell apart. There is a 11.8% up day there, and there is a 9.5% up day there. What happened? Not much. The market ultimately went down here. And this is where the bottom is, okay? So we know that March of 2009 was the bottom. So between like here and here, the market fell another 5 months and went down another 25%. So those big up days, they may have felt good in the time, but they didn't do anything with regards to putting in a bottom. And just like the last chart I showed you, notice that when a bottom actually was put in place, there were no big up days on the way down. There were no big up days on the way up. Let's go to the next couple. All right, these are the last couple big up days beside the one that took place last week. This is going to be 2020. So this is when the virus broke out. There was a big up day here, 9.4% as the market was falling apart. And then after the market bottomed, we had a big up day here, 8.1%. And a couple weeks later, we had another big up day there. So you could argue that, hey, the big up day here and the big up day here helped produce the bottom. I'd argue this was a unique situation because this was news induced. The move down was news induced. The move up was news induced because the Fed came out and said they're basically just going to do everything they possibly can to make sure the market doesn't fall apart. So this is it. Like, this is every single big up day we've had in the last 25 years. They always take place during bear markets. They never take place at a bottom. In all cases, they were sold into, except for these two, which were news induced. So if you believe last week's CPI number that caused the market to rally like it did, if you believe that is the start of a trend where CPI is going to go down and the Fed's going to be able to slow down their rate hikes and stuff, if you think like that news is equivalent to the news that happened over here at the COVID bottom, then great, maybe we will bottom. But unless that's the case, there's a really good chance that last week's gains are going to be given back and probably going to test the lows at some point in time. Can't say whether that's going to happen in the next 2 weeks, or maybe we get one of these tradable rallies that goes up and over and we don't test it for another couple months, maybe January, February. But unless you really believe that last week's CPI data number was a total game changer, there's a really good chance that we go back to the lows. I hope you got something out of this. Good luck, and I'll see you next time.